Hi students, good morning. Now we are going to prepare three processes, process A, process B and process C. Along with that we are going to prepare costing, profit and loss account. Say, okay, let's read question number 41. A product passes through three processes A, B and C. The detail of the expenses incurred on the three processes during the year 2003 were as under. So, three processes expenses is given below. Listen, unit issued, that means input unit 10,000 units given for process A. Each unit cost is rupees 100. So, 100 rupees into 10,000 unit, you will get 10 lakh rupees. Okay. Then, sundry material, labor, direct expenses, selling and prices per unit of output they have given for three processes. Along with that, they have given the manufacturing expenses and the management expenses and the selling expenses 80,000 and 50,000. These are not allocatable to the process. So, this will not appear on process A, B and C. Okay, it will only appear on profit and loss account. Okay. Then actual output they have given for three process. Process A have 300 units. Process B's output unit actual output is 5,400. Process C's actual output is 2,100 units. Then 2/3 of the output goes to process A. One of output goes to process B was passed on to the next process and the balance was sold. The entire output of the process C was sold. Okay. The normal loss is given for the three processes. Process A is normal loss 5%, B is normal loss 15%, C is normal loss 20%. Then they have given the scrap value for three processes. A's scrap value 2 rupees, B's scrap value 5 rupees and C's scrap value 10 rupees per unit. Then they have given the additional information. Hence, management and selling expenses will appear in profit and loss account. Okay. Now we are going to prepare process A account, process B account and process C account and costing, profit and loss account. Okay. Let's go to prepare the process A account. Okay. For my sake, I have prepared the question for my understanding. Okay. Let's see. So, whenever you started the process A account or process 1 account or process account, you started with the input introduced on debtor side. Okay, what is the input they have given? 10,000 units. Okay, and each unit they for rupees 100. So, 100 into 10,000 you will get 10 lakh rupees. Then sundry material 10,000 rupees and labor 30,000 rupees, direct expenses 6,000 rupees entered. Now after entered, we can calculate the total. So at the end of the process here we have 10,000 units input and 10 lakh 46,000 total cost for at the end of the process A. Let's find out normal loss 5%. Okay. 5% means 5 by 100 into input value 10,000 you will get 500 units. Okay, with the scrap value 2 rupees you will get the scrap value of normal loss 1,000 rupees. Then find out the abnormal loss. We have the format, that means input 10,000 units minus normal loss 500 units, you will get the normal output 9,500 units and it will be subtracted with the actual output they have given the question for process A, that is 9,300. After subtracted you will get 200 units. Then how can you find out whether it's an abnormal loss or gain? Listen, actual output is lesser than the normal output. It is considered as it is treated as the abnormal loss. Okay, so we have the abnormal loss 200 units. Then we need to find out the value of abnormal loss. We have the format to find out the value of abnormal loss. We need to find out the cost per unit. What is the format to find out the cost per unit? It's very simple. Total cost minus the scrap value divided by total input minus normal loss. As per the format, total cost we have 10,46,000 minus the scrap value 1,000, you will get 10,45,000 rupees divided by total input 10,000 units minus normal loss 500 units, you will get 9,500 units. After divided, you will get cost per unit is 110 rupees. Okay. Then find out the actual output. Output at the end of the process A, you need to find out the output. Okay, how can you find out the output? They have given the question clearly. Listen, process A's actual output is 9,300 units. Okay, then from the 9,300, 2/3 of the output of the process A. Okay, so we will take 2/3 of the output from 9,300 actual value. So after calculated, you will get 6,200 units. Okay, it's called output value. So what is the value for 6,200 units into cost per unit 110? You will get 6,82,000 rupees. This is called output. At the end of the process A, you will get the output, but you can write against this value by process B's account, which means this output at the end of the process A's output is treated as the will be transferred to the process B account. Next account has the input value. Okay, so for that you are going to write process B's account, within the bracket you can write transfer. Okay. Then we need to find out the finished stock. How can you find out the finished stock? Listen, we will add the values of input values. Okay, 500 plus 200, 700, 700 plus 6,200, you will get 6,900 rupees. From this total value from the creditor side, 6,900 rupees subtracted from the 10,000, you will get 3,100 rupees. This is the 3,100 units. Okay. The cost for what is the cost for this 3,100 units into cost per unit 110, you will get 3,41,000 rupees. So against this you are going to write finished stock. So this is called as what? That balancing figure is called as finished stock. Okay. So how can you get the balancing figure? The difference between the total input and the value of a credit side, you will get the balancing figure. Okay, into multiplied with that 110 rupees, you will get the value of a finished stock is 3,41,000 rupees. It is to be sold out. That finished stock is to be sold. Okay, so process A completed. Then we are going to prepare the process B account. So whenever you prepare the process B account, the first transaction you are going to taken from the process A's output and enter into the process B as the input. Okay, so what is the input for process B? 6,200 and 6,82,000 rupees transferred from process A into process B. Against this value you are going to write to process A's account, because these values taken from the process A's output. Okay, now it is treated as the input of a process B. Okay, then after that only you are going to enter the expenses they have given in the process B. Okay, that is sundry expenses 15,000, labor 80,000, direct expenses 18,150 taken from process B's expenses and entered here. Now we need to find out the normal loss. Okay, after we enter the units, input units and the expenses given from the process B and enter here, we can find out the total. Okay, so 6,200 units after added 6,82,000 plus 15,000 plus 80,000 plus 18,150, you will get 7,95,150. You will enter both the side, this value on both the side. Okay, then find out the normal loss 15% for process B into input 6,200, you will get 930 units for normal loss. How much scrap value for 5 rupees with 930 units? You will get 464,650 rupees as the scrap value for normal loss. Now we need to find out the abnormal loss, whether it is a abnormal loss or abnormal gain. How can you find out? We have the format for that to find out whether it is a abnormal loss or gain. Listen, the input introduced for process B 6,200 subtracted from the normal loss 930, you will get the normal output 5270. Okay, subtracted from the actual output given in the question 5400. After subtracted, you will get 130 units. Whether it is, how can you find out if it's a abnormal loss or gain? It's very simple. The actual output 5400 is greater than the normal output. So it is called as abnormal gain, 130 rupees. Then we need to find out the value for abnormal gain, 130 units. So before that, we need to find out cost per unit. If you find out the cost per unit only, you can find out the abnormal gain. So what is the cost per unit? We have the format for that. That means total cost minus scrap value, you will get 7,90,500 rupees. Okay, they divided by total input minus normal loss, you will get 5,270. After divided, you will get cost per unit is 150 rupees. Okay, then you can find out the value of abnormal gain. So for that, you can multiply 130 units into cost per unit 150, you will get 19,500 rupees as the abnormal gains value. Okay, now we need to prepare the output of the process. Listen, process B. Listen, the process B's actual output is 5,400 rupees. The half of the output will be taken to process C account. So, what is the half of the output for 5,400? After divided, you will get 2,700 units will be transferred to process C account. What is the value for 2,700 units? It will be multiplied with the cost per unit 150 rupees. You will get 4,05,000 rupees. So, this value is considered as at the end of the process B, the value of it is treated as output, but it will be transferred to process C account as the input. At the end of the process B's output is transferred to process C's account as the input. Okay, then the rest of half of the unit, half of the value from 5,400 actual output goes to process C account, and remaining half of the value will goes to finished stock account for sold. Okay, so 2,700 goes to process C, and the rest of the 2,700 from 5,400 goes to finished stock for sold. Okay, the value for 2,700 into 150, you will get 4,05,000 rupees. Okay, process B is completed. Then at the end of the process B, we have the output. It will be transferred to process C's account as the input. Okay. Now we are going to prepare the process C's account. Started with on debtor side. We taken the output from the process B account and enter into debtor side of the process C account as input. The input value of process C 2,700 and 4,05,000 rupees. Okay. Then against this you are going to write process B account because this value is taken from process B account. Okay. Then other expenses you are taken from the process C's from the question. Sundry material 5,000 rupees, labor 65,000 rupees, direct expenses to 27,200 rupees. Okay, then we need to calculate the total input 2,700, total value at the end of the process C 5,02,200 rupees. Then we are going to find out the normal loss 20% for process C. For calculated with the input value 2,700, you will get 540 units. What is the scrap value for 540 units? The scrap value for 10 rupees, you will get 5,400 rupees. Okay, then find out whether it's a process B is abnormal loss or gain. It has the format to find out whether it's a abnormal loss or gain. Input value subtracted with the normal loss value, you will get the normal output 2,160 units. It will be subtracted from the actual output process C given in the question 2100 units. Okay, after subtracted you will get 60 units. If the actual output is lesser than the normal output, it will be treated as the abnormal loss. So here it is the abnormal loss is 60 units. Okay, then we need to find out the value for abnormal loss. Before we find out the value of abnormal loss, we need to find out the cost per unit. Then only you can find out the value of abnormal loss. How can you find out the cost per unit? It is very simple. That is a total cost minus a scrap value divided by total input minus normal loss. You will get 4,96,800 divided by 2,160 rupees. After divided you will get 2,230 rupees. This is called as cost per unit. Then you can calculate that cost per unit into 60 units. Cost 230 rupees with 60 units, you will get the value of abnormal loss, that is 13,800 rupees. Then the balancing figure we called as a finished stock. How can you find out? Listen, we need to add 540 plus 60, 600. That 600 will be subtracted from 2,700. You will get the balancing figure 2,100. It will be multiplied with the cost per unit to 230. You will get 4,83,000. So this value is called as finished stock. It is to be sold out. Okay, then process C is completed. Now we are going to prepare the costing profit and loss account. There are two sides, a debtor side and a creditor side. Okay, on debtor side, all the losses and the expenses will show on debtor side. All the gains and income will appear on creditor side. Okay, so all the losses taken from the process A, B, C, abnormal loss from A, abnormal loss from B, and the management expenses, selling expenses will be appears on costing profit and loss account on debtor side, because this is the called the expenses. Then come to creditor side, abnormal gain from B and the scrap value. When you sold the normal loss through scrap value, so we will get the cash. When you sold the normal loss through scrap value, you will receive the cash, right? So this is the income. So scrap value, through scrap value you will sell the abnormal losses goods. Okay, so it's considered as the income. So scrap value of normal loss A, B, C will be entered here. Then we need to find out the total, which side we have the higher value, that side we consider as the total accordingly. Credit side we have the higher value, that is 1,82,300 rupees. The total will be entered on both the side. Then we need to add the debtor side value 22,000, 13,800, 80,000, 50,000. After add all the values and subtracted from the total value 1,82,300, you will get the net loss is 16,500 given the question. Okay, that's all. Do you have any doubt? Please comment it in the comment box. Thank you. Take care.